Welcome to the deep dive. Today we're diving into the world of continuous glucose monitoring.
Sounds exciting.
It is, especially with a company like Senseonics Holdings, Inc., ticker symbol SENS.
Senseonics. They've definitely been on my radar.
We're going to unpack their business model, their financials, and how the market sees them.
Should be interesting. They're doing some pretty unique things in the CGM space, right?
Yeah, they're all about implantable CGM systems.
That's a pretty big differentiator in a market that's expected to reach, like, what, $7.5 billion by 2030?
It is, and that's a huge opportunity. I mean, think about it. Implantable.
Right. Not your typical stick-on sensor.
Exactly. Their main product, the Eversense, it's got the longest lifespan out there.
6 months. Wow.
From a single sensor. That's huge for people managing diabetes.
No more constantly replacing sensors. That's got to be a game changer.
It is, and they've even got a newer system, the Eversense 365.
Oh, yeah, I read about that. Only needs calibration once a week.
Pretty impressive tech. But I'm curious about the patient experience side of things.
Well, they've really focused on making it user-friendly. Removable transmitters, on-body alerts, minimal skin reactions.
So it's not just about the data.
Nope, it's about how people actually live with the technology.
And that seems to be working for them. They've got the integrated CGM designation now.
Right, which means their systems can work with insulin pumps.
Automated insulin delivery. That's the future of diabetes management.
Absolutely, and Senseonics is right there on the leading edge.
Okay, so they've got the tech, they're focused on the user, but what about the people running the show?
Well, Tim Goodnow's been the CEO since 2015. He's seen the company through a lot.
And during that time, they've released some pretty innovative products, but they've also had to make some tough choices.
Like those cost-cutting measures.
And remember when they canceled that reverse stock split?
That was a pretty bold move, showed a lot of confidence in their future.
It did. But let's be honest, their financials have been a bit of a roller coaster.
Lots of investment in R&D, which is good.
But they've also had losses and fluctuating revenue. Makes you wonder about their capital allocation.
It does. Finding that balance between innovation and sustainability is key.
They did report a net income of $142.1 million back in 2022.
Yeah, that adds another layer to the story.
So their financial picture is definitely complex. What's their overall health look like right now?
Well, their market cap is decent.
But their price-to-earnings ratio? Negative.
Yeah, those past losses are still affecting them. They haven't consistently turned a profit yet.
And their revenue growth. Up and down over the past 5 years, not a great sign.
And the preliminary figures for Q4 of 2024
show some growth. But it's too early to celebrate.
I agree. We need to be cautious with those numbers.
All right, let's dig a little deeper into their financials. What about their profit margins?
Ooh, that's where things get a little tricky. Negative across the board. Gross, operating net, all negative.
So they're spending more than they're making? Not a sustainable situation.
Not in the long run.
And then there's the elephant in the room?
Debt. Yeah, their debt-to-equity ratio is high. Very high.
They are heavily reliant on borrowed money. That could limit their options going forward.
It definitely could.
So we've covered a lot of ground here.
Yeah, we have.
We've looked at Senseonics, technology, their leadership, and those financial ups and downs.
Lots to unpack.
But we're not done yet. Stay tuned for part 2 of our deep dive into Senseonics. We'll be exploring market sentiment, ownership structure, and conducting a full risk assessment.
So before we dug into some of those financial challenges, we were talking about some pretty exciting technology. But what does the market think about Senseonics overall?
You know, it's interesting. There's a kind of cautious optimism.
Cautious optimism. Why cautious?
Well, they did get FDA approval for the Eversense 365,
Right.
And the launch has been pretty positive, so there's definitely some excitement there.
The stock price has been doing well, even hit a 52-week high. But those financial concerns are still there.
They are. And that's why there's that caution. Some investors are wondering if the market is maybe overlooking those red flags. It's a balancing act, isn't it? Weighing the potential against the risks.
Exactly. And when you look at analyst price targets, they're all over the map. Some are super bullish, others are way more cautious.
Shows you the level of uncertainty, right?
Definitely. So yeah, cautious optimism is a good way to describe it.
Makes sense. So who are the people putting their money behind Senseonics?
Well, institutional ownership is actually quite high.
Oh, really?
Yeah, around 13.67%. Big names like Vanguard and BlackRock are in the mix.
Wow, that's significant. Those are some serious investors.
They are, and they clearly see something in Senseonics.
Makes you think, right? If those giants are investing, maybe there's more to the story than just the financials.
It's possible. And don't forget about insider ownership.
Oh, right, the people who work for the company.
Yeah, that's significant too. About 21.03%.
Huh. And have there been any insider trades recently?
There have been some purchases, actually, which is often seen as a good sign.
Okay, so we've got big institutions and insiders putting their money where their mouth is. But we can't ignore the risks.
Definitely not. We need to take a good hard look at those.
A risk assessment.
Hmm,
Should we do a SWOT analysis?
perfect. So what are Senseonics' strengths?
Well, the technology is obviously a huge one.
Absolutely. The implantable nature of their systems is a major differentiator.
And they've really focused on the patient experience, making the technology easy to live with.
It's not just about collecting data, it's about how that data fits into people's lives.
Right. And that integrated CGM designation is huge.
Definitely puts them in a good spot to capitalize on the growth of automated insulin delivery systems.
And they've built some key strategic partnerships, which could really help them scale up.
So yeah, they've got a strong foundation to build on.
But there are some weaknesses we have to consider. Their financial performance has been inconsistent, to say the least.
Definitely a concern. They haven't shown consistent profitability yet.
And that debt is a big weight on their shoulders.
It is. They've got to figure out a way to manage that.
And right now, they're really reliant on the SENS systems.
It's their main product line, which is a bit risky, right? Having all your eggs in one basket.
Yeah, they need to diversify if they really want to succeed long term.
Absolutely.
So, weaknesses acknowledged. What about opportunities?
Well, the CGM market is booming. It's expected to keep growing significantly.
It's a big plus for Senseonics.
And the Eversense 365, with its longer wear time and less frequent calibration, has the potential to really disrupt the market.
It could be a game changer. What else?
Well, they could expand into new markets, right?
Like Sense.
New partnerships, too. Maybe
Yeah.
even develop some complementary products or services.
Lots of possibilities.
There are. But we also have to talk about threats.
Of course. Every business faces threats. What are Senseonics' biggest ones?
The competition is fierce. You've got Dexcom and Abbott. They're the big players in the CGM space.
And they're not standing still. They're innovating too.
Exactly. And there's always the risk that some new technology comes along and disrupts everything.
Like they say, disrupt or be disrupted.
Right. And then there's pricing pressure.
Especially with insurance companies and how they handle reimbursement.
And you never know what's going to happen with regulations. Could be changes that hurt Senseonics.
A lot to consider.
It really is. It's a complex picture. Senseonics is a company at a crossroads.
High potential, but some significant challenges to overcome. So, is Senseonics a hidden gem waiting to be unearthed? Or is it a risky bet that could backfire?
I think that's the question we're all trying to answer, isn't it?
And we've given our listeners a lot to think about. They've got the information now.
They do. And hopefully they can use this deep dive as a starting point for their own research.
It's been a fascinating look at Senseonics. They're a company that really embodies the excitement and the risk of the stock market.
Couldn't have said it better myself.
If you enjoyed this deep dive and you're hungry for more insights like this, make sure you subscribe to the Stock Analytics AI YouTube channel.
We're constantly exploring the world of stocks and investments, uncovering hidden gems and analyzing potential risks.
And don't forget, all the source material for this deep dive is linked in the show notes, so you can dig even deeper into the numbers and the stories behind Senseonics.
Now, as always, a friendly reminder, the information we've shared today is for educational purposes only. It's not financial advice.
Investing in the stock market always involves risk, so it's super important to talk to a qualified financial advisor before you make any decisions.
And don't forget, the artificial intelligence we use in our analysis is still under development. So while it's a powerful tool, the results aren't a guarantee of future performance.
Thanks for joining us on the deep dive. We'll see you next time.